Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq. Joining me is Noah Hamman, founder and CEO of AdvisorShares, to discuss investors needing to get hedged and manage market risk. Noah, it's great to see you. Welcome back to Trade Talks.
Thank you.
What factors have you concerned about market volatility ahead, and what hedging tools should investors consider?
So the concern obviously is the upcoming election. Very nervous that it'll be a bit contested. Hopefully there's a solid decision one way or another. But we're also remembering we're in the middle of a global pandemic. And so we feel like the market's back to those all-time highs, maybe with the exception for today, of course. But very nervous about the risk ahead for investors. So we are definitely talking about hedging. We're talking about non-correlating assets such as cash, being careful with things like gold that might actually go down if things get into trouble from a marketplace perspective. So hedging is our key theme.
That's so interesting that you mentioned gold, because it's Wednesday, October 28th, and virtually everything is down, gold included, which is typically counterintuitive when you see stocks selling off the way that they have. So if you had to pick a spot, where would you look to be long?
So the categories we like for being long right now, not surprisingly, have been the drivers of the return this year, which is the tech space. We think that will continue, right? We don't see slower usage of Zoom or slower uses of Amazon or slower uses of social media. So we like that space, but we also do like the Vice category. It's traditionally seen as recession proof. We actually have our own Vice ETF with the ticker symbol ACT. That ETF through yesterday is up 11%, so almost doubling the market return of this year. So, there's no guarantees. You're still long equities in that portfolio, so it can kind of act sometimes like gold. But if we're going to have a recessionary time frame, these are the stocks that can probably hold up the best.
Yeah, and if we take a look at a couple of the ETFs that we have on the charts here, we're seeing that advisors are employing more of a tactical, rules-based approach in their practice. Why do you think that is?
I think you got to be nimble and you've got to adjust, right? Money is meant, we believe, to be managed. So tactical is important. We actually launched 2 ETFs at the end of last year. So for us, it was almost kind of perfect timing with the Nasdaq Dorsey Wright team, DWUS, US focused, and DWAW, all world. So it's global focused, and they'll rotate around for you. So whether you're an advisor and you're making the decisions yourself around ETFs or stocks that you're using, or using tools like that, be nimble, be ready to make adjustments, I think is a smart thing to do with your portfolio.
How often do they rotate the portfolios? How does that work when you have a rules-based approach?
So with Nasdaq Dorsey Wright, they're very technically driven, right? So they're not looking at the fundamentals. They really are just concerned about the prices. At the end of the day, that's what's most important. So they're constantly looking at it every day, but they're typically only making adjustments once a month. If something extreme is going on, they can take discretion being actively managed portfolio, but they try to be very disciplined with their approach. It's consistent, it's quantitative, and so they're going to look to make those changes monthly, but sometimes they won't make changes. So if you look at those 2 portfolios, they've been tech focused. They're up, both of them close to 25–30% this year, right in line with the Nasdaq index. And so they've maintained that exposure all year long. So even though they can be tactical, doesn't always mean you have to be tactical.
All right, Noah, great to see you as always. Hopefully on the other side of this, we'll be back in studio or inside ETFs, and we can all be back on the road again.
Thank you, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.